Hey guys, you're with Kelly Wilson of the Wilson team, and I have a special guest today, which is Wendy Mason from Reverse Mortgages, the CHIP Mortgage in Canada. And we just wanted to do a very quick video to talk a little bit about what is the CHIP Mortgage and the Reverse Mortgage, why is it so popular to Canadians right now, and who qualifies for this mortgage. So thanks for coming in, Wendy.
No problem. Thanks for having me.
So Wendy came in today to talk to our brokers a little bit about the program and just get some newer brokers that have just joined our team a bit familiarized. So we wanted to do a quick video to talk about some of the most important things that you need to know if you're looking at reverse mortgages, or you know somebody that might be in need of one or may qualify for one. And we'll just start with the most basic question. So who is CHIP?
Oh.
And
That's the $1 million question.
The $1 million question.
So CHIP is a product. So CHIP stands for the Canadian Home Income Plan, and it's one of the products that we offer through Home Equity Bank. We are the only bank in Canada that is dedicated to that senior demographic. So we really understand what's important to them, what they need, what kind of challenges they're facing. So we've got the CHIP product that we can offer them to help them with their retirement goals.
Yeah, and I mean, you guys really do corner the market when it comes to this product, right?
Yeah.
It's not something typically offered from any of the big banks.
Yeah.
If somebody is looking for a reverse mortgage, you guys are the main leaders in this in this product.
Yeah.
So I guess the next one is, who can this help? What demographics are you guys looking for, and how does it sort of work?
Okay, so our clients basically need to be at least 55 years old. So as long as they're 55 years old and they've got some equity in their home, it's an opportunity for them to come and see somebody like you to help them see if they would qualify for a reverse mortgage.
Okay. And when you're talking about equity, a lot of people don't know what that word is. So what does equity mean? What does that look like?
Equity is basically what you own in your home above any outstanding mortgages that you might owe.
Yes.
Makes sense?
Yeah. So typically, I guess if your house is worth $500,000 and you don't have a mortgage on it currently, the equity would be about $500,000.
Right.
So I guess the next question is, if you're 55 plus, is there an opportunity to get a CHIP mortgage if somebody already has a mortgage on their house right now?
Yeah. Yeah, so what we would do is we would just look at taking over that mortgage, so paying off that mortgage, so you only have a reverse mortgage with us. Okay. And then you're not going to have to be making any payments on your mortgage once it moves over to our bank.
Okay. And why do you think that people would actually want to do a reverse mortgage? I mean, there's the cost of lines of credit. I know a lot of people try to compare it, which we know it's hard to compare that.
It's different, right? It's sometimes a line of credit might be the best solution for you. But if you can't qualify for a line of credit, or maybe you don't want to make those monthly payments on a line of credit, and you do meet the criteria for a reverse mortgage, that might be the better option for you.
Yeah, so in terms of strategy, what's the best way to strategize with a reverse mortgage?
Yeah, people are using it for so many different things now. It used to be that it was those clients that were struggling in their retirement, but that's not what we're seeing now. We're seeing a lot of people who are maybe gifting down payments to their kids. You know, their kids are wanting to buy, but with the changes in the regulations, they need to be coming up with larger down payments for that purchase. So they're going to the bank of mom and dad looking for a little bit of money. So rather than the parents cashing out investments or whatnot to give to the kids, they're doing a reverse mortgage, taking some equity out, giving it to the kids, maybe as an early inheritance, so the kids can get access to what they're going to get later on down the road, but get it now to help them get into a home. So we're seeing that early inheritance. We're seeing people just want to travel. You know, they've worked hard all of their life. They're retired. They've got this equity built up in their homes. Why not use it to help enjoy their retirement a little bit more? Using it for investment strategies. You know, we're seeing people take the equity out of their home and buying an income property.
Oh, that's real.
Right? So there's just so many different ways that people are using it now that it's more part of a retirement strategy now than just a last resort option that people are being forced into.
Yeah, and a lot of people want to stay in their homes.
They do.
Right?
Yeah.
And the pensions are not the way they used to be. They don't look the same as they
No.
used to.
No.
A lot of that's changing.
A lot of people don't even have them. Less than half of the Canadian population actually has a pension.
Right, and a lot of people don't want to move into family right away.
Nope.
They want to stay independent.
Yeah, or the family doesn't want them moving in.
Yeah, that's
It's
true.
two sides of that coin.
Okay, so will the homeowner own? I guess the big theory is that because you're not making any payments, it's got to accumulate somewhere.
Right.
So what happens in the effect of will Chip own their home entirely?
Yeah, no. So we don't take ownership of the home. We register a mortgage just like any of the other banks do. As far as owing more than what the house could be worth at some point, that could happen, if you're setting records for, life expectancy, and the mortgage balance could eventually creep up to what the house is worth. If it does end up being more than what the house sells for, we take a bath on the shortfall. So we don't come after the estate, we don't come after beneficiaries. Whatever the fair market value of the house is, that's what we take. Any shortfall is our liability.
And I mean, with real estate is always, to me, a fairly safe investment.
It is.
In terms of
Yeah.
growth and, 3
Yeah.
to 4% increase per year.
Yeah.
So typically you shouldn't be outrunning it, but it's a rare case.
It doesn't happen very often at all.
Yeah.
Yeah.
So can you get this anywhere in Canada?
Yes.
Oh,
We lend all across Canada.
everywhere. There's
Everywhere.
nowhere you don't lend.
Nowhere we don't lend.
That's amazing. Okay. So basically, what are some really quick tips to help somebody think, could I qualify? Could I not qualify? What's some because the application process is pretty easy with you
It
guys.
is. Yeah.
Probably one of the easiest with all the banks and all the
Yeah.
mortgage rule changes and getting
Well,
harder for people to
It is.
qualify.
Well, because there aren't payments required, we don't have to worry about debt servicing,
Yes.
right? So it doesn't matter what your income looks like in retirement. There's, we have an option for you, right? As long as the equity is there, of course, we can get something together for you. They don't have to make payments, like I said, so there's no making payments, so you don't have to worry about qualifying, but there's also, you don't have to make payments, meaning you don't have to make payments, right? You can, even if it's just
Keep your cash flow.
keep your cash flow. So maybe you're not taking any extra equity out of your house. Maybe you're just transferring your existing mortgage away from a different bank over to a home equity bank. That's just going to alleviate your monthly mortgage payment, and that might be enough to make that big difference for you in your retirement.
Yeah, that's a huge one.
Yeah.
So basically, the key features are the no payments.
Yeah.
You do not have to qualify like a regular mortgage.
Yeah.
It is based on the property, the age, the equity in the home.
Yeah.
So very different qualifications.
Yeah.
And any other, what about?
I mean, another good one is the survivorship rule. So if something happens right now, if you're a married couple and something happens to one of the spouses and they pass away, they need to go back in and requalify with their bank
That's so hard.
in order
We see
to keep their mortgage. And that's rough.
It is.
That's a rough conversation to have.
We see it a lot.
If that happens with us, the mortgage just stays as it is. There's no requalification. There's very minimal admin work that needs to be done. They don't need to requalify. The mortgage just stays as is. No more. They don't have to start making payments. They just can continue living in the home and not worrying about doing anything about the financing.
And we're seeing that where a lot of people in retirement now, a lot of the credit was only in one person's name.
Yeah.
And so if something happens to that person, the other individual or spouse doesn't have the ability, even with a pension, to take on anything, maybe because of lack of credit or,
well, you're
limited
reduced income, right?
Reduced
income.
income.
All of a sudden there's only one pension or one income stream coming in if one spouse passes away, right?
Yeah.
Or maybe there's two. It's very reduced though, and with the B20 changes, getting them to requalify is
It's hard.
it's very
It's
hard.
hard.
I know. Yeah.
All right. Well, for more information, we're going to produce a quick tip guide, and it'll give you a lot more information in terms of who, obviously give us a call at the Wilson team. We will definitely look at the whole application and make sure that we can get an answer fairly quickly.
Yep.
It's the turnaround time's also pretty pretty significant. And
Yeah.
is there credit? Do you have to have amazing credit to get this product? So that's another huge advantage, that even if there was some hiccups along the way,
Yeah.
or you had some life changes that happened, we want to make sure that you understand that this is not a credit driven product. This is not an income driven product. This is
Equity.
an equity product. Okay.
Yeah.
So thank you so much for
You're
joining
welcome.
us. All right.
Thanks for having me.